Ladies and gentlemen, good day and welcome to the Kewal Kiran Clothing Limited Q2 and H1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. The presentation which Kewal Kiran Clothing Limited has uploaded on Stock Exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Kewal Kiran Limited business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. I now hand the conference over to Mr. Hemant Jain, Joint MD, Kewal Kiran Clothing. Thank you and over to you, sir.
Thank you, Riddhi. Good morning, everyone. It is our pleasure to welcome all the participants to the earnings conference call for Q2 and H1 FY25. Joining me on this call is Mr. Pankaj Jain, President Retail, and Marathon Capital, our Investor Relations Advisor. I hope everyone had an opportunity to go through our investor deck and result release that we have uploaded on the exchange and our company's website. Firstly, on behalf of entire KKCL family, I would like to wish each and everyone a happy Diwali and prosperous New Year. We are delighted to report strong start with cross-casual acquisitions, unlocking consolidations benefit and driving growth through Junior Killer brand, which is also gaining good transactions. The sales performance in the quarter was positive and stood at rupees 308.2 crores with a consolidated growth of 17.4% year-on-year. The standalone sales for the quarter was marginally impacted on account of lower manufacturing due to slowdown in consumer demand in the first quarter. However, we had corrected that situation, but garment manufacturing being a lengthy process, we couldn't cater the demand fully in Q2. We are also in the process of revising our strategy and focus on our other brands like Integrity and Lawman, and believe the result of these efforts could be seen in the subsequent quarter. We are seeing optimism in demand due to Diwali festive and believe this trend to improve further with the upcoming wedding and winter season. We believe that with the growth levers and strategic initiative in place of creating a diversified product portfolio and transforming into a brand powerhouse across age and gender, we stand at the cusp of transformation from denim-centric origin to becoming a vibrant lifestyle brand company. To capitalize on the huge potential in the fashion apparel section, we intend to further solidify our position with increasing our retail presence through brand-led EBOs to enhance brand visibility. At this direction, there was a net addition of 21 EBOs in Q2 FY25 and further 8 cross EBOs got added on account of consolidation, bringing the total number of EBOs to 534 EBOs as on September 30th, 2024. Further, there are around 55 EBOs which are in various stages of development. With our inherent strength of strong balance sheet, in-house manufacturing capabilities and decades of fashion and designing experience, we will continue to bring the best of products offering catering to diversified consumer base across gender and age. With this, I would like to conclude and open the forum for questions. We can now begin the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Lakshmi Narayan KG from Tunga Investments. Please go ahead.
Thank you. Good morning. A few questions. So first is from your cash flow from operations on a consolidated basis, right? If I look at it, the cash flows have operating cash flows have come down because there is an increase in trade receivables. Can you just explain whether it is a one-off or how do you see this?
Good morning, Lakshmi Narayan ji. Okay, if you look at the previous quarters, Lakshmi Narayan ji, okay, our working capital cycle had drastically come down to 106 odd period. We were looking at leveraging this and trying to come as reality as possible and coming close to the market. So that product, but we feel that we are losing on the opportunity perspective in terms of the inventory. So I feel our total working capital would still stay ahead at 120 to 130 odd days period, and this trade-off receivable is a one-time structure. I think the entire working capital would stay at around 120 to 130 odd days.
Got it. And because that is more pronounced in the consolidated, I think that's the reason I asked. Second question is that there is a footnote to the account which says that you are actually purchasing a land for around 57 crores. Can you just explain, perhaps you would have explained earlier, I missed out in any other earlier calls. Can you just help me understand what is this regarding?
The property which we are looking at buying out, it is required for the head office and the registered office. But currently the head office is falling short of the manpower requirement. Also, we are also looking at exploring the possibility of monetizing the current asset which is with KKCL right now.
Sorry, sir, I didn't get a clear answer. Or maybe I didn't understand it well. So there is a current office which which you may monetize, and you would actually relocate to a new place. Is that a right way to think about it?
Yes, that's right.
Okay, and where is this place, sir? This one, this new
100 meters from the current office.
Got it. And from cross sales, what is the how much it has added for the first quarter and for the first half, and how much of cross sales has come in this quarter, and how did it compare with the previous year quarter or previous year half?
The cross has performed extremely well during this quarter. The total revenue is around 55 crores and the EBITDA margin has become at par with KKCL.
And what was the cross sale either the previous quarter as well as the previous year's second quarter?
The entire year figure was around 175 odd crores. There were since the numbers were not comparable because of the accounting policy and structure, that's why we have not given a comparable figure.
Okay. And what is the total rental expense at a consolidated level? How much you pay as rent across all your...
it will be minuscule on the total level because most of the KKCL stores are FOFO stores, and the number of EBOs on cross brand is also not that high. So the total rental level will be minuscule.
Got it. So on cross, just one last question. If you look at full first half on a broad basis, how much the growth would have come in cross first half for the brand H1 FY25 with respect to H1 FY24?
Okay.
Lakshmi Narayan ji.
ਹਾਂਜੀ.
Yeah, Hemant here. लक्ष्मी नारायण जी, लास्ट ईयर के जो क्रॉस के अकाउंटिंग जो सिस्टम से और अभी जो हमने जब लिया तो पूरा अकाउंटिंग सिस्टम ही चेंज कर दिया. सो द लास्ट फिगर्स है ना, अभी जैसा इंडेक्स के हिसाब से अपने को अकाउंटिंग करना पड़ता. सो वी डोंट हैव दैट फिगर्स के जो कंपेरिजेबल है. बट यस, नेक्स्ट क्वार्टर आपको क्वार्टर टू क्वार्टर आपको कंपेरिजेबल फिगर मिल जाएंगे.
Okay. Thank you, sir. This is very heartening, and congratulations on great set of numbers.
Thank you, Lakshmi Narayan.
Happy Diwali.
Happy Diwali to you.
Thank you very much. The next question is from the line of Tejas Shah from Avendus Spark Institutional Equities. Please go ahead.
Hi. Thanks for the opportunity. So far, we have got very tepid numbers from most of the fashion retailers this quarter. But most of them have also indicated that October was strong because of good festive season. So from your experience, how do you read the current demand environment on the ground?
Good morning, Tejas. Okay, I feel whatever everyone is saying is we are at par with those numbers itself. We have seen a strong attraction coming from August end itself. And we feel that this positivity is going to continue for the next 2 quarters at least.
Okay. And Pankaj, while looking at the inventory in the system today, and not only for us but for industry at large, do you see that industry will go on very aggressive discounting in this festive season or before December, or you think that inventory levels are comfortable?
Sir, I think everyone has been able to manage the inventory levels well. So I don't feel if the quarter 3 looks fantastic, I don't think there will be an aggressive discounting happening in the fourth quarter.
Okay. And Hemant Bhai in his opening remark also mentioned that there were some challenges or loss of demand because of production issues. If you can elaborate on the same, and what are we doing to kind of address those issues so that we don't lose demand in future?
So ideally, last year we tried one of the experiments which was trying to work on inventory and try to come in a real-time basis. Okay, that didn't work very well for us. Okay, and that's why you'll see that the working capital during that period had drastically come down. Okay, we felt that we lost opportunity in the coming quarters, and we feel that going forward, since working capital will definitely increase from 100 days to 120 odd days, but we'll definitely not lose on the opportunity.
Sure. And just hypothetically, if we would have not lost this opportunity, then our growth would have been higher by what amount?
Should be around 10%.
Sorry, should be around?
10%.
Oh, wow. Okay. That's all from my side. I'll come back in the queue for more questions, and happy Diwali to you and the team. Thank you.
Happy Diwali to you.
Thank you very much. The next question is from the line of Palash Kawal from Nuvama Wealth. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on good setup with us.
You're not audible. Sir, can you be a little loud?
Yeah. Okay. Just a minute. Yeah. I hope I'm audible now.
Yes.
Yeah. So, sir, my first question is around Killer Junior. So, how has that fared, and how do you see it panning out in the upcoming quarters?
The Junior we launch in April, and we have a very good performance, and मुझे ऐसा लग रहा है कि at least season 2 or season 3 में हम एक अच्छे नंबर पे पहुंच जाएंगे. We are getting a very good response in the Junior. It's a very first season for us also. But yes, a very positive sentiment in the market, and in futures Junior का business भी बढ़ा, मुझे ऐसा लग रहा है कि business बढ़ा होगा.
और सर हम margins
now is available in all the large format stores. Just we started, and we are getting a very good response. All the good EBOs, good all large format stores. So it is very first season for us also.
Okay, sir. And sir, margins कैसी होगी Junior में in next 2-3 years? How do you plan?
See, because lots of brands are coming in Juniors. Because see, if you want to grow, then you can grow. Either you increase your category, either you increase genders. So कैसे कोई भी चीज में कैसे होता है कि अब today's the brand is all about the lifestyle. Earlier ये थे कि यार women's वुमेन्स वेयर ब्रांड्स अलग था, मेंस वेयर ब्रांड अलग था, किड्स अलग था. अब ऐसा नहीं है. इट्स ऑल अबाउट द लाइफस्टाइल एंड मार्जिन. अगर हम इसमें करेंगे तो सी वी विल मेंटेन एज अ केवल किरण, वी विल मेंटेन 80 to 20% EBITDA margin.
Okay, sir. Got it. And sir,
minus होता है, averaging is around 80 to 20%. We will maintain that.
Okay, sir. That was helpful. And sir, how many EBOs are we planning to add this year?
So under development, if you look at the channel, okay, under development are close to around 55 odd stores.
Okay. That's it from my side. Thank you for your answer, sir, and happy Diwali to the whole team.
Happy Diwali.
Thank you very much. The next question is from the line of Sahil Doshi from ThinkWise. Please go ahead.
Hello. Yeah, I hope I'm audible, sir.
Yeah. Yes, you are.
Yeah. So thank you for the opportunity and best wishes for the Diwali, sir. Just a question related to gross. If I see the receivable days or the working capital, on a sale of 55 crores, the debtors shows as 76 crores, the balancing amount. So just want to understand what's the working capital cycle in gross, and is there a readjustment this quarter or a one-time thing, as you said? So if you can explain that.
Ideally, okay, on cross, we look at the net working capital. The net working capital will be close to around 100 odd days.
Okay. So what is the reason for this? I mean, if I just do console minus standalone,
basically, see, most of its sales or more of the generally it operates. Majority of its sales is from one of the channel of sales, which is LFS, where the working capital requirement is very high.
Right. So is there a one-time adjustment this quarter, or this is the regular feature?
No,
which
this
is
is going to be a regular perspective.
Okay.
But if we are able to crack the other channels of sale very well, okay, the working capital cycle would reduce.
Understood. But is it right to say, sir, that the debtors is 76 on a sale of 55 of gross for this quarter?
That's right.
Oh, okay. Understood. Second question, sir. Hemant bhai, you said in the initial remarks that you are looking at a rework strategy in integrity and lawman.
No.
So, sir, can you talk a little on that? What is our plans now for this year? And second, on the K launch also, we were working on the new format. So, if for the next 1-2 years, what is the thought now?
For the K launches, okay, as we said, okay, it's too early and it is on a standstill position for at least a year period. Okay, lawman and integrity, okay, we are looking at it, particularly for lawman, we are looking at retail expansions, which you will see from quarter 3 and quarter 4.
Okay, and on the integrity and lawman, meaning what is the revised strategy as such?
Integrity, we have looked at, okay, competing against the value price brackets brands and as well as private labels. Okay, extraction or maybe the numbers for the same should fall from quarter 1 of the next year.
Understood. And in one of the previous questions, you called out that had this impact of production not been there, you would have seen 10% growth in standalone this quarter. So now, since we've moved back to the earlier model, what do you think for the next half for the Kewal Kiran standalone at least? Are we hopeful of a double-digit growth here?
I'm hopeful for a double-digit growth, sir.
Understood.
And we are trying our best to achieve that figure.
Right.
And अभी market sentiment is also positive. If you see कि भाई हमने अगर अगस्त से देखेंगे तो अभी market sentiment is also positive and we hope कि we will achieve double-digit growth.
That's good to know, sir. Right. And just last question, in the cash flow, if I see in the first half, we made a payment of 117 odd crores for the subsidiary.
Yeah.
Could you bifurcate how much of it is for the K Lounge Limited and how much would be for Cross, and what is the expectation in the next half?
116 crore we are paid to the Cross.
Okay.
Yeah.
So that 70 crores of rights of Kewal Kiran will come in next quarter.
Yeah.
Understood, sir. Thank you so much, sir. Thank you, and best wishes, sir.
Thank you very much. The next question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, good morning, sir, and thanks for taking my question. Firstly, looking at a 3.5% decline in standalone, now company has a higher salience of East. This year, Dussehra and Diwali are earlier, and we typically sell in our merchandise to the channel partners. All said and done, optically, at least this quarter, YOY should have been on the higher side. So, in last quarter, we had a 17% decline. So, all in all, there hasn't been a significant improvement from last quarter. Would you agree with this assessment? And in light of most value fashion retailers reporting good set of numbers, is it not a fair assessment that we are kind of losing share to those players?
Saying that we are losing shares to value segment would not be a right assessment. But definitely, as we said, that we lost on the inventory on the strategy which we had placed for our inventory to work on a real-time basis. Had it not been the case, we would have reported an absolute growth in this quarter. So definitely, saying that, losing it to value retail is not the right aspect.
Okay, so you are saying that because of your manufacturing issues, you lost out on growth, and adjusted for that, you would have grown 10% instead of 3.5% decline. Is that right?
That's right.
Okay, so basically, I'm assuming that these problems are now behind, and going forward with this number, 3Q, you should be clocking upwards of 10% growth, right?
Should be in the case of quarter 3 and quarter 4.
Got it, sir. That's very helpful. Secondly, I heard the previous participant mentioning a receivable of 76 crore versus revenue of 55 crore for Cross. Does it pertain to receivables which are prior to the acquisition? And if so, have you made adequate provisions for these receivables?
No. The business works on that operation and the working capital. I said we look at the net working capital there. When he said that there's a debtor cycle, so debtor cycle on that channel of sale will stay at the same levels which are at today.
But sir, 55 crore revenue, the receivable can't be more than that unless it is of prior period, right?
No, not true. Not true.
Okay, I'll maybe take this offline. Thanks, sir. That's all from me.
Thank you very much. The next question is from the line of Mehul Pathak, who is an individual investor. Please go ahead.
Good morning, sir. Congratulations on an excellent set of numbers. Sir, I wanted to know, at a conceptual level on supply chain management, people plan sales based on estimates of demand, or nowadays many companies, even in the FMCG, if you take Asian Paints or Marico or even Page Industries, which is similar to your line of business, they replenish demand, based on how sale is happening. So Page Industries calls it ARS, Asian Paints calls it vendor managed inventory, Marico calls it vendor managed inventory. So what exactly sold is what is getting replaced. And therefore, on the 100 I don't know what systems you follow, but there could be some scope there. This is just a suggestion you might like to evaluate. According to me, in this system, inventory can easily come down by another 60 days. By putting in newer processes in place and newer softwares.
Putting it on the software would not be the right aspect, and the company is a hybrid model structure where it is into manufacturing, wholesaling as well as retailing. So, and the working capital is right now it's standing at close to around 120 odd days. I think that's the most efficient working capital working structure. Bringing down would, we had tried that, in the earlier quarters, and we failed we lost on the opportunity, I would put it that way, on the inventory cycle. So, we feel that, going forward, our inventories or the net working capital goods going to stay at around 120 odd days.
Sir, but I don't know whether you are following something like an automatic replenishment system, or is it the traditional supply chain planning model where you will estimate next 6 months what the demand is going to be and then you will plan manufacturing?
Really, it's not a FMCG based business. It has business risk as well as fashion risk. It's not a core item. So most of the products are fashion which are perishable and goes on sales after a 6 month period. So the same strategy does not apply, but definitely, okay, we'll try to explore some of the opportunities on the automated systems.
Thank you, sir. My best wishes to you.
Thank you very much. The next question is from the line of Dheeraj Mistry from Antique Stock Broking. Please go ahead.
Yeah, thank you for the opportunity. So my first question is related to the cross. What would be the ASP of cross, and when we compare it with Killer, Lawman, and Integrity, and how it has been positioned against each of the brands?
So if you look at Cross as a brand, okay, a majority of its sales is women denim wear, okay, women denim western wear category, okay. Its core competition, okay, on those channel of sale is, I would say, okay, Levi's only, that and it is priced reasonably as compared to this competition brand.
Okay. And then it would be lying much more in premium compared to, let's say, Killer or let's say Integrity and Lawman.
See, comparing it vis-a-vis is not the right example because both are in two different genders. Okay, you compare it to ladies category and a men's to men's category. So we every brand of ours has a typical TG or competition which is caters to. As I said that okay, Cross competes majorly with Levi's, biker women, and only.
Okay. No, the reason why I'm asking this question is that if I see your sales realization per unit, that is down by almost 22%. So I was trying to compare realization of Cross versus Killer jeans.
That would give you a vague example because it has a composition of lot many things. One is the mix, one is the gender, one is the category sales, it has accessories also. So that will not give you a right perspective on that.
Got it. And second is related to the P&L, that our depreciation, if I look at that has gone up from 2.6 crore to almost 93 crore. And likewise for employee and other expenditure. I understand that this is because of the integration, but what kind of run rate we can expect in terms of employee depreciation and other expenditure? And as far as I know that depreciation shouldn't be going up because when we acquired Cross, there was no manufacturing entity which was acquired with the Cross manufacturing.
You are right in saying that okay, depreciation should not have gone up. Okay, it is an additional amortization of intangible asset which was paid to him, to the company.
Okay. And regarding employee cost, what kind of run rate we can expect going ahead?
Similar perspectives which are there right now.
Okay. And this amortization would continue for how long?
7 years at least.
7 years. Okay. And so lastly, continue.
The total amortization for the quarter was around 6 crores. Okay, and the total it's going to continue for a 7-year period.
Okay. And lastly, if I remember correctly, that last year there was a very bad winter season and that resulted in almost flattish kind of sales last year. So on that base, we still expect that the growth would be still in only in double digit, or we can expect high teens kind of a growth. Looking at the current demand scenario.
We have already started our dispatches with winter wear as a category. Okay, we see that okay, there is going to be a good winter this year. The only thing is when it starts, that allows you to have an additional margin or not the margin, because if it starts late, the number of stocks sold during the discounted period increases, not in the fresh sell through. So that is not in our hand.
Got it. That's it from my side. Thank you.
Thank you very much. The next question is from the line of Ritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, thank you for the opportunity. Just few questions. Now these EBO expansions that you're talking, I hope these are franchised is what you're referring to?
See, as far as company policy is concerned, 85% should be the FOFO model and the 15% should be the COCO model. So if you see the हमारा जो mix of opening of stores that is nearly 90% is still with the FOFO model.
Okay. Incrementally also it will be like that only, right?
Yeah.
Okay. My second question is, 2-3 years back when you started your reshaping journey, so the focus was killer and Lawman in integrity, we had an opinion to not expand those brands. Now when I listen to your call,
Yeah, please continue.
Okay, let's say have a lesser focus. Okay, not expand but lesser focus. What specifically have you guys now thought about Lawman integrity? Because the space, see, you were saying that the market is about casuals and denims. So, what specifically are you now seeing in integrity? And you're talking about adding stores and all. What changes are you seeing, and what changes are you going to get into the brand also?
But if you see, मैंने opening notes में भी बोला है कि we are again changing the strategy in integrity and Lawman. Lawman we says we will only do the retail stores, and the integrity we are trying our best. So it is too early to say anything. It is already started. See, मैंने ये कभी नहीं बोला कि हम उस brand के ऊपर है ना focus नहीं करेंगे. हमने थोड़ा focus slow किया था. अगर आप मेरा past भी अगर मेरे statement देंगे तो हमने कहा कि our major focus is on the killer, and the first we will because it's all about the market share. तो market share में हमारा ये था कि सबसे पहले हम compete करेंगे killer से, उसके बाद we will do integrity and Lawman. Already we started thinking on those brands, and you see that result in maybe in the first quarters of next year.
Lucky, okay. See, killer has already come to a auto mode position.
Okay.
Okay, so that has been scaling also. Okay, we have also seen that, last 1.5 year period, value segment has moved very well. Okay, and that's why we re-strategized at integrity and competing against the value format as well as the private labels of those brands.
Okay.
So,
okay. On the Cross brand, the numbers are not a part of this P&L, right?
Sorry?
For the Cross brand, the acquired Cross brand,
correct.
The performance is not a part of the reported P&L, right?
It's a part of consolidation.
It's a part of consolidation. Okay. Can you tell me the size of the loss Cross brand for the quarter?
This year we did 55 crores.
Top line has been around 55 odd crores.
55 crores for the quarter.
The top line has been 55 odd crores, and the brand has been able to achieve EBITDA margins which is equivalent as KKCL.
Okay, and it is a line-by-line consolidation, right? Because you have a 50% holding in it.
It's a line-by-line consolidation.
And then a minority.
Yep.
Okay. Done. Thank you very much.
Thank you very much. The next question is from the line of Deepak Lalwani from Unifi Capital. Please go ahead.
Hello, sir. Thank you for the opportunity.
Yeah, Deepak.
The question is, in the standalone business, since we had production cuts, is there any channel which specifically got affected because of this issue?
Sorry, I didn't get your question, Deepak.
Sir, in the standalone business, when we had production cuts, did any channel get affected because of this?
LFS.
Okay. And the other channels were flat. That's the understanding. Okay. And the growth going forward, when you're talking about 10%, what is backing this growth? Is it just the low base of last year, or?
We work on a pre-booking perspective. So we had orders in hand, we were not able to produce it equivalently well.
Okay, understood. And this 10% growth, can you just bifurcate it into volume and prices?
We haven't broken down into volume and price, but I'm talking 10% would be in terms of value.
Okay, got it. And so the cross run rate for this quarter was about 55 crores. So should we assume that this is the seasonally best quarter, and or you can give some light on what this run rate should be on a quarterly basis across?
Overall, they did around 175 odd crores last year period. Okay, the current quarter it has been on a growth perspective. Looking at the numbers, okay, every quarter there will be a margin change perspective, not much.
Okay, so this 50 to 55 crores should be maintained, assuming a 10% growth on that 170 crore number.
Yep.
Okay, understood. And the receivables and cross look a bit high.
Deepak, I want to say something about the cross brand. I says कि जब हमने acquire किया, the turnover was last year 176 crores, and cross is only available in only large format stores. We changes our strategy and we says कि the other channel are all open, so we are trying कि 3 से 4 साल में उसका turnover double हो जाए, and we are already started working on that.
This you will see from the current quarter itself. In the first quarter itself, we are able to come at par at EBITDA with KKCL.
Okay, understood. And sir, lastly, on the receivables and cross, it looks a bit high. So any provisions that need to be taken for this?
So any provision which is as per KKCL norms has been provided in the cross also.
Okay, got it. Thank you, sir. Those were my questions.
Thank you, Deepak.
Thank you very much. The next question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Yes, sir. Hi. Thanks for taking my question. Sir, from a EBO expansion strategy perspective, currently our presence is more in the eastern space, plus the presence is under-indexed in metros also. So I just wanted to check of the expansion that we are talking about, what is the strategy in terms of expansion region-wise and city tier-wise going ahead?
See, we know that, we are under-penetrated in the metro-centric. We are working on a strategy to penetrate it more better. But right now, whatever is under development, it's a mix of both metro-centrics as well as Tier 1 and Tier 2. As we rightly reported that 85% would be around COCO odd stores and 15% at COCO odd stores. Most of the COCOs would be metro-centrics.
Understood. So going ahead, whatever our expansion plan is, that 10-15% of that will be towards metros, and that will happen via COCO stores. Hello.
Yes.
Okay. Second question is from this Lee Wrangler perspective. So these brands actually sort of went outside the system, and then they are sort of coming back with a new investor also. So any thing that you're noticing from a competition perspective, which is also sort of hurting our growth?
They're scaling up their business from a zero-based structure. So right now, I would not say that it is hampering the business, but definitely it's a competition.
Okay. Just a little better, sir. So whatever shelf space we were able to acquire from these brands, so
present in all our channels of sales, they are now have a concentrated focus on one of the channels.
Concentrated focus on one of the channels. Okay, got it, sir. Understood. Yeah, that's it from me.
Thank you very much. The next question is from the line of Ankit Kedia from Phillip Capital. Please go ahead.
So just wanted to understand cross receivables better. Is the accounting policy such a way that the inventory which we push to LFS is recorded as receivable days, given that as per the SOR now with Ind AS accounting, the inventory will be on their books and hence receivable days are higher?
True, Ankit.
And because the festive season was earlier, we would have pushed a lot of inventory in cross to LFS channels, and hence it's looking higher. So for the product sold, is it fair to assume 30 to 60 days is the receivables in cross, and the remaining amount would purely be inventory at the LFS category level?
Okay, the inventory has been carried forward, right? Okay, over this period. So base stock doesn't increase. We are maintaining the same base stock structure. Okay, and secondary has been. So if I look at the tertiary levels of sales at Cross, it has been at growth.
Right. So our accounting of 55 crores, what we report in Cross is actually tertiary sales or the sales which we do only to the LFS channel?
Tertiary sale.
Right. So the inventory, can you give us the inventory number at the LFS category for Cross? Because that will sort out the issue of the receivable days, actually.
Okay, Ankit, we can take this later, and you can talk to me directly on this so that we'll work on the number. I don't have the exact number right now with me.
Sure. And second question is, when you say last year's sales were 175 crores for Cross and there is an accounting change, can you just tell us what has been the change in accounting which Cross used to have before versus today as per KKCL? Because then that 175 crores is not a relevant number for us if the accounting change is very significant.
Okay, the 175 crores which was given last year was with the change in numbers and accounting policies, everything done for, and it was provided for in that number.
Understood.
The actual reported number in their balance sheet was much higher.
Understood. So 175 crores is like to like after the accounting change. Understood. That's it from my side. Thank you so much.
Thank you very much. The next question is from the line of Siddharth Purohit from InvestQ Investment Advisors Private Limited. Please go ahead.
Yeah. Hi, sir. So just one clarification. With regard to the amortization you said, amortization for this quarter was 6 crores and that was for the acquired company and that will continue for 7 years, but quarterly will be 6 crores, right?
The 20 crore, 21 crores is around the annual figure.
Annual figure, and that will continue for 7 years, you said. Okay, sir. That's all from my side. All the best, sir.
Thank you very much. As there are no further questions, I would now like to hand the conference over to Mr. Hemant Jain for closing comments. Thank you, and over to you, sir.
Okay. Thank you very much. I would like to thank once again to all of you for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our IR team for any clarifications or feedback. Thank you all, and once again, wishes for a good festive season. Happy Diwali and prosperous New Year.
On behalf of Kewal Kiran Clothing Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.